and action. So we will also be having lectures in the class. The lectures will be broken down into PowerPoint presentations provided by the publisher on the chapters within the book. You need to go up to the course website and watch the MP4 dynamic yield curve presentations that I've videotaped to give you a solid foundation in yield curve dynamics, because the yield curve and yield curve dynamics are the basis for interest rate movements, for yield curve shifts. And most yield curves shift either due to open market operations by the Federal Reserve to buy and sell bonds to drive bond prices up and down and interest rates up and down to either cool or stimulate the economy. But all debt, all equity securities are priced off the yield curve. And go to the URL of the dynamic yield curve and look at that and study that. We will also have a presentation later in the semester on financial product innovation and product development. And how do you customize financial products and services with the attributes that meet the needs of the clients. We will also discuss financial product and service production and distribution of those products and services through the broker-dealer or the brokerage or the branch network. We will also go through business development strategies for these products and services on behalf of the financial institution. How do you conduct target marketing and research to identify the market segments? And how do you create a target marketing mix of marketing approaches and advertising in products to be able to meet those needs for different types of clients, both institutional and retail. Then we need to understand the marketing, but particularly the sales cycle. How do you find prospects from your research, target them, come up with advertising or marketing campaigns to then get in front of them, to then be able to take them through the sales cycle from prospecting all the way through to closing the transaction, where the fees and the commissions come in. Client relations and customer service is key. Once you get the client, you need to service the client. You need to be able to build those relationships for ongoing sales opportunities. So once you get the client locked in, you can cross-market products and services to them, either branded or non-branded, depending on the platform in which you're operating. And then there's a feedback loop through the customer service process. The client is going to tell you exactly what they like and they don't like about the products and services, and then you can go back to the innovators and developers, tell them what the client wants, and then they can modify the product with the attributes that meet their need and continue to sell products and services along the technology curves, or the S-curves, and along the product adoption cycles, or product adoption curves. And if the company can do this, they can drive continuous revenue growth into the future, into infinity. And if a company can drive predictable and rapid revenue growth, or free cash flow, or EBIT or EBITDA, or earnings or dividends per share, they will maximize their share price, and they will benefit from the low cost of debt and equity that's available to them in the marketplace. And then lastly, we will have some custom presentations, my presentations. The first will be the political philosophy and economy of commercial real estate investment. This is basically a thesis that basically has identified risks and volatility associated with political cycles, politics, policy formation, policy development, and policy implementation, which seems to be the last two risk premiums that most economists seem to forget, and we'll go through that. The second is modern and postmodern real estate portfolio theory. This is based on Henry Markowitz's work from the late 50s. He was the inventor of modern portfolio theory. This is a doctoral dissertation in which I produced and presented that goes through how to build a diversified portfolio of institutional grade commercial real estate properties using Markowitz's modern portfolio theory, but also extends the theory, the application, into postmodern real estate portfolio theory that gets into how do you develop indexes that track the real estate cycle, and then how do you develop the derivative product or the property derivatives to be able to hedge off the real estate risk embedded in the institutional real estate, commercial real estate portfolio. Or maybe use those derivatives to go long view of your position and not buying the direct real estate, but buying the real estate cycle and that property sector cycle by using property derivatives. And then lastly, I will do an overview and an integration of finance theory and application in a series of lectures. And then the last series of lectures will be exit lectures that will be given to you in modules that will give you the intellectual infrastructure that you need to be able to use as machine language to be able to store massive amounts of data and information for retrieval, for decisive decision making, not only for yourself, but on your client and your family's basis. Thank you very much. And